Iraq and TotalEnergies sign a $27 billion energy deal, and Egypt's annual inflation hits a record 36.8% in June. You're watching The Daily Brief with Forbes. I'm Ramia Faraj. Iraq and France's TotalEnergies have signed a $27 billion energy deal for 4 oil, gas, and renewables projects. Iraq has a 30% stake, TotalEnergies has a 45% stake, and Qatar Energy holds the remaining 25%. The gas growth integrated project aims to improve Iraq's electricity supply. TotalEnergies will also develop a 1 gigawatt solar power plant and is inviting Saudi's Aqua Power to join the project. And a seawater treatment plant will enable Iraq to use seawater for oil production instead of fresh water. Meanwhile, ENOC Group has signed a 10-year sale agreement with Qatar Energy for the supply of up to 120 million barrels of condensate starting this month. ENOC says the long-term agreement with Qatar Energy will help it cater to energy needs in the UAE and the broader region. The terms of the agreements allows a further increase in condensate volumes, as more is expected to be exported from Qatar once the North Field East and North Field South expansion projects come online. Egypt's annual consumer inflation shot up to a record 36.8% year-on-year in June, fueled by higher food and beverage prices during the Eid al-Adha holidays. F&B is the largest single item within the inflation basket. It rose by 64.9% last month. However, on a month-on-month basis, Egypt's overall inflation rose to 2% in June. At its last meeting, the Central Bank of Egypt kept key interest rates steady for the second straight time as the rise in inflation was in line with expectations. The value of the Syrian pound plunged to nearly 10,000 against the dollar on the black market today. The embattled currency stood at just 47 pounds to the dollar before Syria's civil war broke out in 2011. The official exchange rate approved by the central bank is 6,532 pounds to the dollar. Damascus has blamed the country's economic woes on Western sanctions and the knock-on effects of an economic collapse in neighboring Lebanon that has stemmed the flow of dollars into government-held areas. UAE-based digital healthcare startup Alma Health has raised $10 million in a Series A funding round. It was co-led by Knuro Capital and Hambro Perks Oryx Fund. Alma Health plans to use the funds to accelerate its growth in Saudi, enter new markets, and hire top talent. Established in 2021, Alma Health provides health tech solutions to people with chronic conditions. It offers virtual doctor consultations, home lab tests, automatic prescription renewals, and other services. Hong Kong rose today on hopes Beijing has ended its long-running crackdown on the tech sector. After a years-long probe, Ant Group was hit with a near $1 billion penalty for so-called illegal acts, while Tenpay was ordered to pay more than $400 million. The news, which was announced Friday, saw the New York-listed shares of Alibaba and Tencent surge, and their Hong Kong stocks followed suit today, with the Hang Seng closing up 0.6%. Meanwhile, Alibaba is considering selling shares of Ant Group back to the fintech firm after Ant Group proposed to start a $6 billion share repurchase program. Alibaba says it received notice from Ant Group of a shareholder meeting to approve the proposal. Alibaba holds a 33% stake in Ant. It comes after the roughly 3-year regulatory crackdown slashed its $300 billion valuation by a steep 75%. Let's take a look now at today's Forbes Real-Time Billionaires ranking. It tracks the daily ups and downs of the world's wealthiest people. Our biggest winner today is Reliance Industries' Mukesh Ambani. He's at $3.4 billion with a net wealth of $96.9 billion. Our second biggest winner today is LVMH's Bernard Arnault, up $1.1 billion with net wealth of $223.8 billion. And our third place winner is EV battery mogul Robin Zhang, up $928 million with net wealth of $32.6 billion. Check out our website and our social media for all of the latest Billionaires news. And top crypto Bitcoin could reach $50,000 this year and $120,000 by the end of 2024. That's according to Standard Chartered, who say a jump in its price could encourage Bitcoin miners to hoard more of the supply. This will reduce net Bitcoin supply and push Bitcoin prices higher. Standard Chartered published a $100,000 end 2024 forecast for Bitcoin back in April, saying the crypto winter was over. But now it says there's a 20% upside to that call. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. See you tomorrow.